All right, so this is a follow-up video to the prior video where I showed the Strategy Quant X workflow. This one just shows an example of how I find some of the biases that I use to determine the trading time frame, trading window, and as well as come up with some of these strategies that I kind of tune before I start having Strategy Quant X do its data mining. So there's really four different kinds of seasonality or bias that you can try to look for. One of them is intraday, one of them is intra-week, one is intra-month, and then beyond that, you have different forms of seasonality like holidays and maybe like what quarter is it, what part of the year is it, are there earnings reports coming up, that sort of stuff. So in this video, I just want to show intra-week simply because we are currently in a series about daily chart trading, and so this is a good example to show this tool that's part of our community for paid members, how to use that, and also how I use it, not just for daily chart strategies, but also for refining the workflow that I use in Strategy Quant X. Okay, so if you look at that tool and you click on the link, you get taken to this spreadsheet where I've got instructions on how you can make a copy for yourself. The way this works is you specify an instrument in the daily data tab, and then a start date and an end date, and then you click the fetch data button. This is going to pull from Yahoo Finance the open, high, low, and close for the entire date range that you've specified here. And then what you have are additional some additional fields that are calculated, like the adjusted close. This is just because the actual close from those open, high, low, close bars are not entirely representative of the adjusted close after dividends have been taken into account. And so if you only look at the closes, you might think that at certain points people have lost money or at least SPY went down, but the reality is if you were holding SPY as a investor, you would have made money because of the dividends. And so the adjusted close allows you to account for the dividend distribution. I'm not going to go into why we use log returns rather than simple returns, but in general, most of the time you want to be using log returns as a form of comparison. And then day of the week here, this one's really important. And kind of the basis for this entire spreadsheet, basically the way it works is if it says Tuesday, the assumption is that the log return represents, well, all the returns here, simple returns and log returns represent buying Monday's close and then selling at Tuesday's close. So here you see Monday has 0 simple return because this is the first date and our start date. And then Tuesday represents if you bought Monday's close and then sold at Tuesday's close, what would your returns have been for that particular day? In the next tab, we have the day of the week seasonality. This is going to look at the entire date range. So our start range was the beginning of 2000 to today. This is going to look at, okay, here is the average of the log returns for each day of the week, and then also show it as a sort of histogram, or rather as a bar graph. This is also where you can see where the turnaround Tuesday strategy might have originated from, because people have noticed that the weekend effect is generally real. And so institutions will oftentimes de-risk on Friday, reduce some of their positions. And then if nothing crazy happens over the weekend, they come back in buying it on Monday. And then usually on Tuesday, they're back in their full position size and the price of the index, or even a lot of US equities like stocks, has been driven back up to institutional size. And then, of course, as the week goes on, different effects might happen. The optimism early in the week might have died off, and then as we get closer to Friday, you see that sort of repeating cycle. Now, the next tab here, range-bound day of the week seasonality, this tab allows you to specify another date range within this date range. So here, this day of the week seasonality tab, this shows you the start date to the end date, but what you may be curious about is recency. So if you notice that it would have made sense to buy Friday's close and then hold all the way to Tuesday, you may wonder, is that still a thing? So you go to the range-bound day of the week seasonality, and now you can put a different start date and a different end date. So in this example, I chose the beginning of 2020 and then up to today, and you'll see that the histogram, or rather the bar graph, is not exactly the same as if you looked at the entire date range. And that's just because of what we call front running. As an effect becomes more known, people start getting into it earlier. They start competing with each other for it. So whereas previously, Friday might have been a day to Friday or Monday even, or days to potentially buy, betting that the weekend is not going to bring any sort of crazy news, and then you sell on Tuesday. And now it looks like people are front running for actually trading less or maybe reducing their positions on Thursday, and then piling in on Friday to get in on that, which is driving the Friday closes higher. And then of course Tuesday is no longer the biggest gainer in the week, and now Monday is. So again, you see this sort of front running effect where the effect still seems to be there to some degree, but now it's been shifted and morphed in a weird way as people have become aware of it, institutions have become more aware of it, quant shops have, and so they have distorted that effect. And so the reason why this is important is because for this sort of seasonality, you can often find a strategy that is backed by data and explainable. So we had a previous effect here that we noticed. We look at recency, we see that the effect is starting to get front run. And so one of the strategies that I mined for, that it's not the strategy I showed in the previous video, but one of the strategies that I have mined for is, what if we look for a breakout only on Mondays and specifically for a breakout above the Friday high? And then I just had Strategy Quant X mine different signals, different indicators, different profit target, stop losses, and just come up with a strategy that, or rather different variations of strategies to capture that effect. And then I ran them through my robustness checks, ended up with far less than what was originally generated. And then I'm watching a few of those in incubation just to see if they continue to perform. And that's typically how you would do it for effects that don't have a lot of backtest data. So here we only have 5 years of data, and you may not entirely be sure you want to trade something that does not have a massive backtest range. And so if you can explain it, and that's the beauty of this, is you notice this effect exists intra-week, and then you can explain it. You explain historically how it came from, or rather, you can explain how it evolved from another historical effect, and then that kind of gives you the confidence to say, okay, I'm watching it in incubation, it still seems to be holding up. I can explain what this effect is, explain why it works, and I'm going to be comfortable taking it live. And so that's kind of an example of how intra-week analysis can be used to come up with a trading strategy that might even be intraday, or it might also be, something that can be done on daily bars. If Friday looks to be a certain way, and then if a certain condition is met, put a stop order on Monday to, right at the Friday high, that could be a way to trade the daily bars as well, even though that's technically like an intraday entry and you're not specifically buying or selling daily bar closes. But hopefully that makes sense as to how the day of the week analysis is used. I'm also going to create a video that shows a little bit how I do intra-month analysis. July's video is going to be about holiday seasonality. And then, of course, at some point, I'm also going to show how I do intraday seasonality, or rather intraday bias analysis as well. And of course, all of this is just part of how I determine, should I be looking for a long strategy? Should I be looking for a short strategy? And then what are some general criteria that I should be looking for, so that Strategy Quant is not just randomly searching all sorts of junk that is probably not going to find anything, but rather using data that I can look at to guide Strategy Quant to make the process more efficient.